No, I'm not David Branis in a Lawrence costume. David had to go out of town for work. Gail would have been up here, but her moving day at the chamber got moved from yesterday to today. and she may have to sneak out. We didn't think it'd be a good idea to sneak out from the podium. So I told David I would take over for him today, and we're going to start with Ross and Reg with our music.
We have all the red, white, and blue out there today, so we're going to do the national anthem, so y'all ready to sing. Oh, say, can you see by the dawn's early light what so proudly real at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight o'er the ramparts we watched, where so gallantly streaming, and the rockets rang grand above bursting in air, yea, through the night, that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the land of the free and the home of the brave.
How appropriate we follow with a pledge. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Kim Green's going to do our invocation.
Thank you, Lawrence. Last evening, I had the privilege of going to the burn camp for children from Louisiana and East Texas. And I've been doing that for about 30 years. And I've had people ask me what it's like. I said, isn't it tough to see these children with these scars, and some of them are missing fingers and ears and such. And I said, the first time I was there, you see these children, and there's so many of them, and it does get your attention. But there's some way that God, He gets you to stop looking like man does, and He lets you see as He does. And all of a sudden you start seeing these are just happy children being normal children at camp for a week. And it's the happiest place on earth. And I get more out of it than the children do. Our men's group from my church, we go over and do ice cream social for the children. And someone said, it's a religious experience. I said, what? He said, yeah, it's a religious experience. The kids love ice cream. So anyway, if you'll join me now, I have a prayer for children's protection. Lord, I pray for your emotional, physical, and spiritual protection over our children. Keep evil far from them and help them to trust you as their refuge and strength. I pray you will guard our children's minds from harmful instruction and grant them discernment to recognize truth. I pray you will make them strong and courageous in the presence of danger, recognizing that you have overcome and will set right all justice and wrong one day. Help us to find rest in your shadow as they live in the spiritual shelter you provide for them. Let our children know that their only safe place is in you and that their home on earth is only temporary. In your holy name we pray. Amen.
Thank you, everybody. Be seated. Matt, if you'll go ahead and put that picture up. The team wars are getting a little lopsided. The A team's coming on strong, but the Rock Stars have a message from their head captain and cheerleader, Megan McDaniel.
So Laura wanted a pep rally, and when you have a pep rally, you need a cheerleader, so I've got an easy chant for us today, okay? Rock Stars, I want to hear you. It goes like this. It's really easy. It's, let's go Rock Stars. Let's go Rock Stars. Let's go Rock Stars. 3 more times. Let's go Rock Stars. Let's go Rock Stars. All right, now here's the real deal, y'all. We continue to dominate in attendance, in presence, in meetings and socials. The things we cannot seem to get together is our donating and our new members. And if we lose this competition, I have to sing karaoke. So here's what I'll tell you. I'll put on the cheerleading uniform and get up here and chant. But if we lose and I have to sing, y'all are my background dancers, okay? So you can either donate or you can dance, all right? Choice is yours. All right.
Lawrence, there were some technical difficulties. Plan B. We're going to go to Plan B. We weren't able to get the music up during her cheer, but I have agreed to put it on my phone, and this is what was supposed to be playing behind her cheering. I personally didn't want to play that, but you gave me the opportunity because the A team is rocking it. Great job, guys. No more. That's it.
Jared, we got a big guest.
Yes, let me go get that list. And my cheerleading, Lindora's cheerleading outfit was at the cleaners right now, so she couldn't do it today. All right, on Zoom, we have Link Coleman, Olivia Dossett, Laura Gaucher, Cody Mayo Jr., and Edward Taylor. Now, in-person guest, if someone has a guest with them, will you please make me way to the microphone?
My guest really doesn't need an introduction because he was our first speaker after the first of the year. It's Michael Butterman, and you know him from all of the fun we have when we go to the Shreveport Symphony. I'm trying to encourage him, along with David Ginsburg and others that know him well, to encourage him to become a Rotarian. So encourage him, make him feel welcome. Thank you.
My guest today is my wonderful husband, Ron Baxter.
My guest today is William Wyford, co-worker at the Cyber Innovation Center and StrikeWorks.
Well, I've got a group here. First of all, our speaker today will be introducing in a minute Rick Wedel. We have Christine Wedel, strangely, same last name. Anyway, glad to have Christine. Some of my former partners who were kind enough to buy the company and let me go and retire, Danny Martin and Chase Crump. And then we have Rashad Johnson and none other than Brandon Wilson. Now, y'all may remember Brandon Wilson, 7 years with the Cincinnati Bengals. He put Joe Burrow on the map. And if you want to know anything about the Bengals, Cincinnati, NFL, there he is. He'll be signing autographs after the lunch.
All right. Welcome all of you.
My guest is Julie Allen. She's Development Director for the Salvation Army.
And I tried to do a Paul Harris last week, and he scooted on me, so we're going to get it in this week. Russ, if you would come on up. I asked him this when he got here if he was going to stay for the whole thing, and he said he would. Russ joined the club in April of 25. He was sponsored by Greg Lott. He is retired from SWEPCO. And Russ has done his giving just methodically throughout the years since he's been a member. He gives, when he gets the raffle money, he rolls it over. When we have the matching, he'll put in $100 here, $100 there, and we match it. And over a period of time, that grows into $1,000 in points. And Russ has met that goal of 1,000. He is now a Paul Harris Fellow, and I'm proud to present you first with your pin for Paul Harris, and then your certificate suitable for framing.
Okay.
Announcing you, Russ Gideon, and recognizing you as a Paul Harris Fellow.
Well, thank you very much.
All right. And one last thing before we get to our program, Reg Abrams has a new member to introduce.
I'd like to introduce to you today Lynette Roberson, who is the Executive Director for Shreve Memorial Library. She came to us about 2 months ago, and Lynette actually is from Shreveport. She's been in Dallas for quite some time, but she's a Caddo Magnet High School graduate also. Previous leadership positions include Director of Irving Public Library and a Managing Director of the Little Elm Public Library, where she also was a charter member of the Little Elm Rotary Club. So Lynette, when she came here, Lynette, I didn't have to seek her out, even though I'm going to count it as a part of the rock stars because she is a new member I brought in. So we're going to count that. But she actually sought out this club in order to become a member of this club, so it wasn't very hard. She's come out several times to be here at the meetings and has been here on many occasions already. She has also held a position of manager and district manager with Dallas Public Library. She earned a Master of Library Science and a Certificate of Advanced Management in Libraries and Information Agencies from the University of North Texas. She received her Bachelor's of Art in Art Painting from Centenary College right here in Shreveport. She's a lifelong lover of libraries and literacy. She is passionate about library advocacy, developing community partnerships, and mentoring and training the next generation of library professionals. And believe me, she's hit the ground running. She's doing a great job. And if you would, I'd like you to put your hands together for our newest member. Provide her with a red badge, Lynette Roberson.
I will be very brief because I was not prepared to say anything today. Thank you. This red badge means so much to me, and I'm going to start working to turn it into a blue badge. Yeah. So I'm looking very forward to getting involved with this Rotary Club and being an active member. So thank you for accepting me, and thank you, Reginald, for sponsoring me, and it's been wonderful so far. Thank you.
And without further ado, I'd like to have Tommy Williams come up and introduce our program.
Yeah, thank you, Lawrence. Feel a little silly. I'm the only guy in a room with a suit on. And I wore this just for Rick because he's been here, I think it's either 9 or 10 times. We tried to count it in the garage a few minutes ago, but we couldn't get there. But 9 or 10 times, and he always wants to see this seersucker when he comes to town. For those of you who haven't heard Rick before or new, I'm going to give you the part that I could memorize. And that is Rick went to Harvard University, where he got a degree in economics and applied mathematics. He graduated magna cum laude. As if that weren't enough, he then went to Stanford and got an MBA, where he was a Henry Ford Scholar, which means he was the top graduate in the MBA program at Stanford. And as if that weren't enough, he spent either 10 or 12 years at Bain Capital, a little company up in Boston that has global outreach and manages $100 billion or something. But the real news is that ended in 2016, and he's been with RFG Advisory in Birmingham for 10 years now. So we now have a history that I have to get some notes on, because I haven't memorized that part. But RFG Advisory has, under Rick's management, $8 billion in assets, and 75 advisors over 150, 75 advisor teams over 150 advisors. I think their flagship is sitting at that table right there, the one that we think is the best of the entire RFG group. But he has a number of awards in the industry. Y'all, most of you heard him before, and you don't want to hear me anymore. So with that said, Rick, it's yours.
I think I normally do not use, for obvious reasons, the microphone because, as my mother said, I have a face and a voice made for radio, and I project very well, so I'm going to try and stay as far away from the mic as I can. I also have my clock up here to make sure I don't go over, since I know that it is critically important that all of you are walking out that door at 1 o'clock, so we'll do that. Can I get the slides, please? Oh, there we are. I've entitled this Market Update and Rants for June 2nd, so we'll go through a couple of different things. We're going to talk about economics, we're going to talk about politics, we're going to talk about a whole bunch of other stuff, and I will leave some time at the end for questions for whoever might like it. So thank you guys for having me up here. Let's talk a little bit. Let's try and talk a little bit. There we go. Let's talk a little bit about how the market's done this year. So the S&P 500 up about 11% year to date. But we had this little period of time in the middle, which I'm going to rant on for just a little bit. We had a drop of about 9.1%, right from about the beginning of the year when the market peaked, down to about the very beginning of April. Can anybody tell me what was going on then? By the way, there's going to be, war, right? Like, we got involved in this conflict in the Middle East. We're going to spend a little bit of time on that. And then suddenly, right about March 30th is when the market turned. We have seen a 19.7% increase in the S&P 500 since that basically since that March 30th date. So a massive rally in the last 60 days, driven by a couple of things that we're going to talk about. Everybody clear on this? Sweet. I do want to talk a little bit about diversification. It's working this year. That is nice to see. I'm always a big fan because it helps, with a lot of the things that I preach up here, that what worked last year doesn't necessarily always work the following year, right? And I think this year is a great case in point. That red line at the bottom is the Mag 7. Anybody know what the Mag 7 is? Yeah, the Magnificent Seven, that's the Netflix and the Googles and all the NVIDIAs and tech companies of the world that Jim Cramer likes to go absolutely nuts about. And they are the worst performing asset class this year on that chart. So for all of you who have friends at home who are like, I don't even know why you would own anything other than what Jim Cramer tells you to, now is a great time to go to them and say, na 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 na, right? Like, you're not doing as well this year. There is a reason to do diversification. In fact, the top performing asset class this year by a wide margin is actually emerging markets, believe it or not, up about 25% year to date. So for those of you who hung in there and owned India and China and some of these other countries, well done, nice work. And then you can see, there's a couple other things. The Russell 2000, the AcquiX US, all of these things, so small and mid-cap companies, foreign companies, all kind of outperforming the S&P 500 year-to-date, partly because of the weakness in, the Mag 7, if we're honest. The other thing that's going on, I was on a plane yesterday, or not yesterday, well, I actually was on a plane yesterday, but I was on a plane this past weekend, and you guys ever flown Delta and they've got the live TV in the back of the screen? Okay, so I was on a plane and CNBC I was looking at their programming and they had 5 hours blocked out of programming with nothing but advertising around silver and gold. Okay, like 5 hours of paid programming around silver and gold, and that got me very angry, so I thought I would rant about it for a little bit, if you will. So this is what I will call safe haven assets year to date. I would note the S&P 500 is up about 11% year to date. Silver is up about 7.4% year to date after suffering a massive correction earlier this year. Gold is up about 5% year to date. Bonds, by the way, are basically flat. And Bitcoin is down about 16-17% year to date. Okay? And this brings me to my favorite horror movie. Okay? Some of you know what my favorite movie is. I've talked about it in front of you a couple different times. We're not going to talk about my favorite movie. We're going to talk about my favorite horror movie. Does anybody want to guess what that is? Not Chainsaw Massacre. Came out in 1999. Was like the first low-budget film to go absolutely viral. It is the Blair Witch Project, exactly. My favorite horror movie is the Blair Witch Project, and I'm going to tell you why. The Blair Witch Project came out in 1999, and it was filmed in large part in Seneca Creek State Park in Maryland. Seneca Creek State Park is about a 6,000-acre state park that follows around about 12 to 14 miles of Seneca Creek as it empties into the Potomac River, okay? Now, does anyone know the plot of the Blair Witch Project in general? No? So, surely someone. Okay, so the plot of the Blair Witch Project in general is there are these 3 journalists, and they're doing this photo video essay around the Blair Witch, and so they wander into the woods where the Blair Witch is supposed to be, once again, filmed in Seneca Creek State Park. They lose their map, they get lost, they spend a lot of time lost until they eventually start to disappear one by one, and then they discover the witch, and the witch kills them all and all this stuff. And it's, it's the normal horror, all that kind of fun stuff. Okay. Now, here is why I love this movie. Is because these people are lost in the woods in Seneca Creek State Park. Can anyone tell me what the inherent logical flaw is in that statement? Yeah, there's a creek. In fact, many of the film's scenes, the creek is in the background as the actor is like, oh my God, we're lost. How in the world do we get out of here? Here's a news flash. If you are lost in the woods and you find running water, follow it downstream, right? It will lead you to something. To my knowledge, there is no flowing body of water that leads to nothing, right? It has to go somewhere, all right? But it's the reason why the Blair Witch Project is my favorite movie, because people make terrible decisions when they're scared. Okay? When we are scared, when we are fearful, it triggers that fight or flight response at the back of our brain, right? And we narrow our options down, we lose our ability to think creatively, and we literally just start to think about where do I run away to, or where do I aggressively attack, right? We lose the ability to think critically. And the reason why Blair Witch Project is my favorite horror movie is because when confronted with fear, we see people making terrible decisions. And by the way, it's not just the Blair Witch Project. If you look at any horror movie, it's always like, why is the blonde running into the scary house as opposed to away from the scary house, right? Or any one of these other things. People in horror movies make terrible decisions. All right, we are not different than that, okay? What's the number one reason why people say they want to buy gold or silver or Bitcoin or anything else like that? Fear, right? I'm scared that the world's about to implode, and so I want to buy gold or silver. I want to show you guys a chart. This is a chart of the performance of gold and silver and Bitcoin and the U.S. equity market and the bond market over the last 3 years, okay? So silver is the blue line. It's up 300% over the last 3 years. Looks like a pretty smooth line. The green line is Bitcoin. It's up 174%. The orange line is gold, up 24%, and then the purple line is the S&P, up about 90%, and then the purple line is bonds, like the bottom purple line is bonds. Which of those asset classes looks the most stable to you guys? Bonds. Right? It's really funny to me because most people who are sold gold or silver or Bitcoin, or that come to me and say, I want to own gold or silver or Bitcoin, the immediate question that I ask is, well, why do you want to own those? And the answer that I always get back is, well, I'm scared. I'm scared about inflation. I'm scared about the market. I'm scared about this. I'm scared about that, whatever it is. I'm scared that the government's going to implode, blah, 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 right? And so I want to own something safe. And I'm like, okay, genius. If you want to own something safe, you can either own U.S. government bonds, or we could even own, like, I don't know, the euro or the yen or Swiss bonds, or there's 1,000 different other stable asset classes out there. And then immediately I get back, well, I don't want to own those. Why? Well, because silver's up 300% last year. So what we're really doing is speculating. We're not actually concerned about being scared, right, about the government collapsing or whatever else. What we're really doing is chasing returns because we had somebody's buddy that made 300% over the last 2 years, and I want to get in on some of that. Okay? And by the way, I'm not saying that that doesn't have a place somewhere in your portfolio, right? If you say, hey, I want to carve off 2 or 3% of my asset and invest it in Bitcoin or invest it in gold or whatever it is because I want a piece of that speculation, that's totally fine with me. But let's just be honest with each other about why you're thinking about doing that, and safety is not the right answer. Okay? Safety is 100% what is not represented by commodities. Commodities represent volatility, uncut, pure, and simple. And so you need to understand that if you're thinking about investing in it. Does that make sense? By the way, I am firmly of the belief that 75 to 90% of the investment products that you see advertised on television are a bad idea. Okay? If you see it advertised, by the way, SpaceX falls into this category. If you see it advertised on television, run screaming in the opposite direction because they do not have your best interests in mind. Okay? Questions on that? Sweet. We'll get to questions at the end. I always forget. I'm not supposed to ask. Okay. Next, let's talk a little bit about market timing, because I think this year has a fantastic example of market timing embedded in it. I was getting a ton of calls right around the end of March saying, hey, we're in a war. Have you seen the price of oil? This seems terrible. It's going to flow through into commodities. That's going to jack up the inflation picture. That's going to jack up what the Fed's going to do with interest rates, blah, blah, blah. We should be getting out of the market right now. Okay? And then March 30th hits, and we got a 20% rally in the next 2 months. Okay? And so I just want to posit something to you. The worst, well, I'll get to that in a second. I just want to posit something to you. There are a number of ways that you can potentially hedge your portfolio against downturns. Okay? You can use an annuity. Tommy Williams on record as saying famously, the income guarantees that are in an annuity aren't too good to be true, they're too good to be free. And that's true, right? You can use a structured note, you can use a buffered ETF, or you can try one of these sort of market timing rotation strategies where you try and jump in or out of the market. And I will just tell you that all of these have psychological benefits associated with them. Okay? We need to recognize as investors that we are not purely rational creatures, right? That our emotions do play into the investment decisions that we make. We get scared. It is okay to admit that that we get scared, right? It's okay to admit that, all right? And by the way, we've just said when we get scared, we tend to make terrible decisions, right? And so if there's a product out there, whether it be a structured note or an annuity or a buffered ETF or something else like that, that helps you get through that fear, then I'm all for it, right? If that's something that you need as a psychological crutch so that when the market trades off by 10% or whatever it is, you say, yeah, but I've got this safety net built into my portfolio, and so I'm okay with that, I'm not going to make a terrible decision, then Godspeed. Right? Like, that's exactly what those portfolios are designed to do. All of those have costs associated with them, right? And for the case of annuities or structured notes or buffered ETFs, you can see that in their internal expense ratios. We can quote to you, like if you ask your advisor, like, how much should this cost or how much is this going to cost, they're going to quote you a percentage. Except for that last one that's on the page, and that's what, in my mind, makes it so nefarious, okay? Because you'll look at a market timing strategy and you'll say, oh, that's free, right? Somebody's going to tell you that it's like, oh, I can get you out of the market at the bottom, I can get you out of the market at the top, and you'll buy back in at the bottom, and you'll miss all the downside of the market, and you'll make part of the upside. And that's not true, because the reality is you only have about a 50 to 60% probability of getting the decision to sell correctly. And by the way, I would note that you actually have a better than average probability of selling at the right time. Okay, let's just acknowledge that. When you're looking at the war, you can probably say like, oh, this looks bad, right? Like, we're actually pretty good at that, believe it or not. Like 50 to 60% probability, most people can look at the market and say like, yeah, now would probably actually be a pretty good time to get out. And so they make that sell decision. The flip side, though, is you only have about a 40 to 50% probability of getting the buy-in decision correct, right? So I don't know how many of you on March 29th were like, now's the time to buy in, but my guess is not that many of you. And the funny thing about the way that conditional probability works is, in order to get the right market timing decision, you need to make the right buy decision and the right sell decision, right? Or said differently, you need to make the right sell decision and the right buy decision. And if you have a 50 to 60% chance of selling correctly and a 40 to 50% chance of buying correctly, the chance of getting both of those right together is only about 25%. So said differently, statistically, when people make market timing decisions, 75% of the time they wind up making themselves worse off. Does that make sense to folks? So I see a lot of nodding in the audience. And I see some of you people that look like you might have a confused look on your heads because you're thinking to yourself, yeah, but I've got a buddy who swears he does it right every time, right? And I will tell you two things that I know to be true, okay? The first is, one of the worst things that can happen to you personally is for one of your friends to go to one of these casinos here in Shreveport and win a bunch of money. That is one of the worst things that can happen to you personally. Why? Because it happened to them. So why can't it happen to me? When all of you, every single one of you in this room is smart enough to know that statistically, if you walk into that casino, you're going to lose money. But if one of your friends gets really hot at the craps table or really hot at the blackjack table or whatever it is, in your mind you're like, yeah, but I see there's a chance. And here's the other thing that happens. We don't talk about our mistakes. We don't. Right? Like very few people, when they're sitting around a dinner party late at night one night, will be like, oh God, let me tell you about the terrible decisions I made this week. Right? I got too drunk at this, or I did that, or I did blah, 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 blah. Oh boy, let me tell you about all the money I set on fire with this trading strategy. Does anybody do that? Of course not, right? That's not wired into our personality. In fact, one of my favorite examples of this is, who in here is familiar with Bitcoin? You guys know anything about the way Bitcoin works? You know that I can't look at it, but I can have a computer look at the bit chain for Bitcoin, right? And I can see every transaction that's ever been done in the currency. It's part of the technology, okay? And so statistically, I actually know that there are more people who have lost money in Bitcoin than there are who have ever made money in Bitcoin. Yet, the only people that talk about Bitcoin are the people who made money in it, right? Which is why everybody's like, yay, Bitcoin! Because the people who lost money in it, they don't tell you about it, right? Anyway, don't market time. I've beaten a dead horse. We're moving on. All right. Let's talk a little bit about Iran. Everybody knows what's going on over there. By the way, this is where I risk not being invited back next year, so that's great. We'll talk a little bit about Iran. So everybody knows what's going on over there. This is a chart that goes back all the way to 1928 that has every major conflict listed on it. So you've got all the different Persian Gulf wars, the Iran-Iraq war, all the way back like the World War II, World War I, like everything is on this chart. And I will just say, it's in the title, what can you discern from this chart about how the market reacts to conflicts? It doesn't really care. Historically, the market hasn't cared. The market is a very, very rational thing, okay? It does not care about anything other than money, right? And in that sense, why does the market not care about war? Yeah, because you got to buy stuff. If anything, and by the way, I'm not a bad person. The market does not care about the human cost, right? It does not care about pain and suffering. It does not care about any of these things. All it cares about is, I don't know, we just spent $500 billion on this little campaign of ours, and last I checked, it's going to take us, several years to actually rebuy the stockpiles of all the stuff that we just shot at people. So that's pretty awesome if you're a defense contractor, right? So that's pretty cool, right? This one's a little bit different because we do have the Strait of Hormuz in play, and obviously oil prices have gone up quite a bit. However, the market is betting that the conflict will end relatively soon if you look at the forward price of oil. So this chart, the axis at the bottom is a little small, but it's basically saying that we're going to be back down to about $75 a barrel oil by 2027, gradually tailing off after that. But the thing that I would like everybody in this room to focus on is the slope of that line as it goes out. It's basically saying, hey, oil prices should drop fairly quickly post-conflict, or next month or the month after that. Like, we're betting that the strait will be open pretty quickly and that we get this solved. I would just note, though, before anybody gets too terribly excited about this, the left-hand chart, this is what I call a USA Today chart because it does not start at zero and it is not a logarithmic scale. And this is what the price of oil was before the war. Right, so before the war, we were paying about $62 a barrel for oil. And by the way, that was with OPEC. One of the things that I will talk about in this room, I don't have a chart on it, but we were at about $62 a barrel with OPEC. If you look at forward curves post, it's projecting a long time before we get this sorted out at like $70 a barrel. I saw an article the other day that was like, OPEC's breaking up. The UAE broke apart from OPEC, et cetera. And so, what does the world look like in an environment? And I can't imagine that the next OPEC meeting that Iran is invited to is going to be like a fun one, right? It's like, imagine that Christmas reunion of the family around the table, right? But like, realistically, if OPEC does break up, I saw this article that was like, this means the U.S. will accede to dominance in world oil supply. And I was like, you guys do understand how commodity markets work, right? Like, the U.S. cost of production is far higher than that of the most OPEC countries. That is why OPEC was formed, was to keep prices high, not to keep them low. And so if OPEC actually does break apart as a result of this conflict, that is not good news for U.S. oil production, because if we actually priced out the curve of where global oil demand should be, I'm not sure that most U.S. producers would be profitable if we were truly looking at swing capacity pricing. So just a heads up there, because I know that oil markets are near and dear to everyone's hearts here. Meanwhile, to steal a phrase from my kid, unemployment is mid. It is not, a couple of you chuckling in here, it's not good, it's not bad. The unemployment rate hovering at about 4.3, 4.4%. A little higher, the Fed's target is about 4%, so we're a little higher than we would like it on unemployment. And inflation, also not great. This is core inflation, so this excludes food and energy. But hey, gang, petrochemicals go into everything, right? Like, I defy you to point to anything in this room that does not have petrochemicals at some part of its supply chain, including the food on your table, right? Even if it's just transporting it around the country, okay? Higher energy prices impact the price of everything, and that is flowing through. And so we've got inflation that's a little bit higher than target. And so I like to tell people we're in a little bit of the anti-Goldilocks scenario right now, okay? So for many years, during the first Trump administration and also the Biden administration, we had what I'll call the Goldilocks scenario. Unemployment was low and inflation was low, right? For much of the, 2010s, okay? And then we are now in a situation, and that's the Goldilocks scenario, right? Because we've got low unemployment, low inflation, and everybody's happy, right? Now we are in kind of the anti-Goldilocks, which is, inflation's a little higher than we'd like it to be, but also unemployment's a little higher than we want it to be, and so the Fed is a little bit like, I don't know what to do here, right? Because on the one hand, maybe I'd like inflation to go lower, that argues for higher interest rates. On the other hand, maybe I'd like for unemployment to go lower, that argues for lower interest rates. They're both flashing high levels. In my mind, that keeps the Fed kind of on hold until it figures out which one of those two is the bigger problem. And by the way, I don't think that the election of Warsh to the chairmanship actually changes that. I think that the Fed will be on hold as far as interest rates go until it figures out which of those two problems it really needs to be focused on, okay? Last but not least, just going to touch on this. I'm not going to touch on this stuff. Too much chart, too many colors. We are in an election year. Okay? Once again, this is where I risk getting rode out on a rail. If you guys have never checked out the website, 270towin.com, it is like an election prediction machine. And what it basically does is it goes around and looks at every Senate race that's active, it looks at every House race that's active, and gives you the kind of winner or loser based on polling in that state. And so I like it because, it gives you a much more granular look at like which states are leaning which direction, et cetera. Senate election predictions, not really a toss-up. It looks like the Republicans will probably maintain control of the Senate. If you look at the House, that is leaning Democratic at this point. And I will just say this. The president's approval ratings are not helping in this regard, and that is in some ways not his fault, just so we're clear, okay? So I am one of the few people in this country that got married, and every day since my honeymoon has just gotten better. Okay, like literally every day since the honeymoon is a better experience than the day we got married, and I wake up every morning happy to get 1% better than we were yesterday, okay? Most married people go through the opposite effect, right? Where you're super excited about the honeymoon, right? And you're like, this is amazing and they're perfect for me. And then 3 years later, you're looking around and being like, well, I mean, this is okay, right? We're good, right? This is fine, right? We're good. And that is true for presidents as well. Every president sees this pattern where they get elected with a whole lot of high hopes about what that individual is going to do for the country, and then you get, 10 to 12 to 18 months into their presidency, and everybody's looking around and saying, this has not turned out the way I hoped it would when the election happened, okay? And by the way, you can tell me that I need to use different polling softwares or this and that and the other. I would tell you it doesn't really matter because in every polling metric that I've seen, whether it's from Fox News or from CNN, all of those polls show a declining curve of popularity, and the direction is what's important here, okay? Now, the question for you guys is, does any of that matter as far as the equity markets are concerned? No, it does not. Thank you. I will not go through this chart in great depth. All I will say is there are a lot of people that look like me that will try and get up here and quote you a whole bunch of what I'll call relatively stupid statistics around, hey, when we have unified Democrat government, this is what the market returns are. Or when we have, a Democratic president but a Republican House and Senate, this is what the returns look like. Or in this election scenario, we have a Republican president and maybe a Republican Senate but a Democratic House. What does that mean for the market? And here's the issue. Modern market was really only kind of, let's look at post-1945 so we have some sort of semblance of relevance in terms of historical context. How many election cycles have we had since 1945? 40-ish, right? It's 80 years. Every 2 years you have the opportunity for the House or the Senate to move one direction or another. So there's 40, and by my count, there's 7 different permutations that they're trying to test with 40 data points. I'm not much of a statistician, but I would tell you there's no way that any of that is statistically relevant. Right? You do not have a large enough relevant sample size to make any type of judgment other than the market generally goes up and to the right. Right? So please, as we get closer to election season, you can vote for any one of a number of things, and I encourage you guys to vote, right? You can vote with your heart, you can vote with your morals, you can vote based on your religious beliefs, you can vote based on a sense of fairness, you can vote based on economics, you can do whatever you want to do, tax policy, whatever it is, that's fine. Vote based on that. Do not vote based on what you think it's going to do to your stock portfolio, because the answer is your vote has 0 impact on whether or not that will move in the positive or negative direction. Okay? With that, I will open it up to questions. By the way, these are disclosures that say I have no idea what I'm talking about, and you shouldn't believe a word I say. Questions? Anybody? Future interest rates. Okay. The 10-year Treasury, if I think about it, is nothing more than what do I expect the average Fed funds rate to be for the next 10 years. Okay? Plus maybe a little bit of an interest, plus maybe a little bit of a term premium. Okay? So in other words, if I looked at you and said, hey, the 10-year Treasury rate is 5%, and I'm going to tell you that Fed funds is going to average 3% for the next 10 years, then you would look at me and say, well, in that case, I should borrow money at Fed funds, and I should lend it out at the 10-year rate, and I can arb those two, right? So by definition, when we start to look at longer rates out the curve, whether it's a 5-year or a 10-year rate or whatever else, it should be roughly whatever our expectation is of where Fed funds are going to settle out, okay? I personally believe that the era of 0% interest rates is probably over, 0.1% interest rates. I think that the Fed is actually probably, I mean, based on where unemployment and, inflation have been hanging out, I think that the Fed, if anything, is actually pretty close to neutral right now. And so we're just going to have to see, right, how that plays out. But I don't expect them to go materially lower than they are today. No, so the Fed has a rate-setting mechanism. They can basically determine whatever they want to for the interest rate. But when we think about Fed funds, and I'm sorry, I'm going to go into a little bit of technical detail. The Fed has, in their mind, what's known as the NAIRU, N-A-I-R-U, which is the non-accelerating inflation rate. The non-accelerating inflation rate of interest. I don't know how the U got in there. Anyway, it's the NAIRU. And basically it's the idea that this is the neutral rate, right? Like this is the rate at which inflation isn't going up, but it's also not going down. That is presumably the rate at which employment is not going up, but it's going down. Anything interest rate that's above that non-accelerating rate should, in theory, slow the economy down, so inflation goes down, but unemployment goes up. Any interest rate that's below the NAIRU should, in theory, cause inflation to accelerate, but unemployment to go down, because you're stimulating the economy. And basically what I'm arguing is that we're pretty close to that kind of neutral rate right now for our economy, as evidenced by the fact that, unemployment's not moving that much, but neither is inflation. I think the market's betting, if I'm honest, that you're going to have to get a little higher in interest rates to get to get inflation down to a level that's going to be acceptable. And we'll see, right? The big wild cards out there on inflation are, one, how long does this Strait of Hormuz thing last, right? Because that's problematic. But then secondarily, if we look at AI, does that deliver lower inflation longer term because it sort of pulls down the cost curve, or is it just sort of a blip and, et cetera? And once again, we'll see.
Rick, enjoyed your presentation. Going back to your anti-Goldilocks situation, I'm in the transportation business. I've seen costs go up 30, 40% over this time last year. I don't see an end in sight. It's like the Wild West out there, especially in the trucking business, and I think it's ultimately just going to be passed on to the consumer, and I don't see any end, and want to see what your thoughts are on that.
Look, there's quite a lot that has been published about the fact that, and once again, you guys are in oil and gas country, so you guys kind of understand this better than anybody else. Even if, let's say we walk out of this room right now and somebody's like, okay, the war's over. You can start moving tankers through the strait again. It's going to take a very long time for oil and gas prices to normalize. You, at this point, have infrastructure that's been shut in. You have, tankers that take a couple months to get from the strait to wherever they're going and then come back again and pick up more oil and get all of that situation moving again. And so you're looking at higher energy prices for a prolonged period of time, and eventually that gets passed on, right? The other thing that I think is out there that's a little scary, and I don't love the fear-mongering headlines, but the other thing that's out there that's a little scary is just the inventory levels globally. Governments have been releasing a lot out of stockpiles to try and keep oil prices lower than they would be. And there's a question as to how much left in that reserve tank to be able to keep oil prices even kind of where they're at, right? So I do think you're looking at higher gas prices, like at least through the end of the year, and I generally agree with you. I don't think companies really have the ability to just sort of eat that, particularly not the companies that we're talking about, right? So like S&P 500 seeing massive profit growth, but that's concentrated in a couple of very key industries where, like, hey, NVIDIA, AI, et cetera, these companies are expanding their profit margins materially. That's not necessarily true for your Walmarts or, your trucking companies, et cetera. So I do think those prices get passed on to the consumer. The interesting thing is, we've talked a little bit about the K-shaped recovery. I don't know if you guys are familiar with that term, but it's this idea that things keep getting worse for lower income consumers, and meanwhile high income consumers seem to be fine. And I just want to explain the implication of that from an economic standpoint, which is, as an economist, what I care about in terms of accelerating or decelerating consumer spending is the savings rate, right? So when consumers get scared, they raise their savings rate, and that means they lower their spending, right? Like, I'm scared, I'm not going to go out to dinner tonight, right? Or if I go out to dinner, I'm not going to go to Superior's, I'll go to, some other cheaper restaurant here in town, right? Okay? If you're at the low end of the income spectrum, your savings rate is already zero. So even though you're economically worse off, and this is, by the way, why I hate it when I hear the government talk about, like, oh, spending went up, that must mean that everything's great. It's like, no. The low end of the consumer couldn't save if they wanted to, right? Like, and things just got worse for them, but materially they do not have a savings, they don't even have an emergency fund account that they could add to, and if they do, they're already dipping into it, right? And so realistically, once again, I'm not a bad person, I'm not saying this is a good thing or a bad thing, but from an economic standpoint, saying like, okay, well, we're going to continue to get higher commodity prices, but the S&P is going to go up by another 7 or 8%. Well, that makes the high-income consumer happy, and so they're content to keep spending. And what happens to the low-income consumer, we really just don't kind of care about, because the reality is that they couldn't save even if they wanted to. So, it's interesting. If you go back in history, there was this concept, in the to go back to a very long time in history, there was this concept of sort of wage slavery, right? Which is like, I'm paying you a wage, but you effectively have to spend it all and more every day just to make ends meet. And there is some evidence that like the low-income half of the population is actually headed towards that, right? It's like, I'm paying you a wage, but the reality is that you can't afford to live based on the wage that I'm paying you, and so like your options are limited. Sorry to end on a negative note, folks.
We appreciate your coming. You're always one of our favorite guests. You've been here many times, and I know you've got a collection of Rotary Club of Shreveport gifts.
I actually do. They're all in my office.
There you go. So I want you to add some nice coasters to it.
Oh, well, thank you very much. I appreciate it.
All right, let's do the raffle real quick. We have $107, so 53 to the winner, 54 to the foundation, and my first winning ticket is 7273. 72, okay, Diane got that. You rolling it, I assume? All right. We've got 4 half dozen eggs, so for the first half dozen, 7229. 72, all right, Aubrey got that. And you can pick them up right over here on the desk. The next dozen, half dozen, 7417. 7417. Paul, okay. The third half dozen is 7304. 7304. Going, all right. Mark. And the last half dozen is 7266. 7266. All right, Diane's winning today. And we've got two Roseneath. One of them, and I don't know what's in either one of them, so you can take your pick. One of them is 7215, 7215, Ross. And the last Roseneath is 7222. 72, over again, all right. We'll get Ross to juggle those tickets up better next time. I want to thank James for being money taker as usual, Ross for raffle, and we self-scanned today. Next week is Frank Bright. Megan has got this gentleman to come. He is an avid runner, marathon runner. Is that 2 weeks? I don't remember who's coming next week then. I wrote the wrong one down. It'll be a surprise, but it'll be fun. Anyway, Frank will be here in 2 weeks. Regardless, everybody stand and let's do the five-way test. Of all the things we think, say, or do, is it the truth? Is it fair to all concerned? Will it build goodwill and better friendships? Will it be beneficial all concerned? And will it be fun? Meeting is adjourned.